Hello everybody! Today's video is about the beta. Beta is actually a measure of the volatility of an asset in comparison with the market. We calculate it by dividing the covariance between the asset and the market by the variance of the market. Let's have a look on concrete example. Here you have the example of Apple and Starbucks, and the market will be represented with the index Nasdaq 100. And here are the betas. You can see that the formula is the covariance between Apple and Nasdaq 100 divided by the variance of the Nasdaq. And the result here shows that Apple is riskier than Starbucks and riskier than the market as a whole. Thank you very much for watching this video. I'll put the link for this Excel in the comment below so that you have access to it. See you next time, everybody.